Welcome everybody by Gearsoft. Today I'm going to present to you an Excel workbook built for managing a multi-asset, multi-currency portfolio in real time, designed for Bloomberg's users. Now the limitation of needing a Bloomberg will be quite evident in the next slide. One thing that I will tell you in advance is that we are giving away the workbook for free for anybody that will make a request for a copy. Now, this is why we are counting on Bloomberg. Sorry, let me go back. All right. These are the asset classes that the spreadsheet manages. So they're equity, fixed income, mutual funds, ETF, equity and bond futures, equity and index option, FX spot forwards, and cash. Now, there are many spreadsheets out there that rely on Yahoo Finance or on other web sources, but normally they are limited just to equity. If you want to have this kind of selection of asset classes, this kind of selection of currencies, equity futures and bond futures, well, you need a reliable and professional source. That's why I'm using the Bloomberg API. In this video, I will show you how to use the workbook, therefore navigating the sheets, inputting your personal settings, how to initialize a portfolio, booking a deal, the portfolio analysis that spreadsheet provides, equity hedging and fixed income hedging modules, calling the Bloomberg function, printing, and a few other things. Prerequisite, well, of course, a Bloomberg terminal. If you don't use FX forwards, any Bloomberg terminal license will do. If you are using FX forward, you need an anywhere license, otherwise it will not work. A Terminal Connect add-in, which you can download from Bloomberg or ask to your Bloomberg rep. An Excel 2014 or newer, and it doesn't matter if it's 32 or 64-bit, both of them will work. Okay, so let's get down to business because we do have quite a lot of things to show you. Okay, let's start opening the workbook. First thing that we'll show is this read-only pop-up. I would definitely recommend to keep it read-only and to save it with your portfolio name or any other name that suits you, and keep a clean copy of the master spreadsheet. So let's open it as read-only. Okay, the first time you open it, the workbook is going to ask you to set your base currency. Click OK. This is the pop-up you will get, and these are the base currencies that you can select from. Let's select Euro. We confirm, and be aware that once you confirm that, you will not be able to change it. Okay, so make sure that you select the right currency. If you make a mistake, not to worry, just reopen the spreadsheet and redo the procedure again. Okay, now we set the base currency of the portfolio. You get the last pop-up that just warns you that you have no commission schedule. You can input a commission schedule, and every trade you will record, we will calculate the commission, either per share or percent or whatever commission plan you have. If you do not have commissions and you don't want to see this pop-up, I will advise you just to put an irrelevant commission on any market that you either don't trade or you trade very seldomly, and this pop-up will not show again. Okay, once you finish this initial procedure, you will see a menu up here on top, Gearsoft. You click on it, and you get a series of icons with submenus. Okay, so you have one icon to navigate the workbook, and then you have one icon for each asset class to book your trades, two icons for hedging calculations, and a series of icons just for various functionalities like Bloomberg functions, commission margin and costs, so on and so forth. Okay, now this is the input sheet where you can set some personal settings. Let's start from bond valuation. You can tell the spreadsheet if you want to revalue your bond a bid, mid, or ask. If your selection is not available in a particular moment from Bloomberg, like you select a bid and there is no bid for a bond that you're holding, the workbook will look for the last price. If there is no last price, you will use last close. If there is no last close, it will use the last available close. Okay, but normally you should always be able to get some kind of evaluation, even for fixed income. Well, we all well know that sometimes you don't have a real quote. Then you have a checkbox, include floaters in bond calc. Okay, what this does is, if you don't include floaters in the bond calculation, you will have an asset class called floaters. And in your bond analysis, the floaters duration will be calculated to the next coupon. And you will not have an yield to maturity, but you will have a spread. If you include floaters in your bond calculation, what effectively the workbook will do is to convert those floaters into fixed rate bonds. And at that point, the duration will be the expiry of the floater, and the yield to maturity will be calculated by projecting the current coupon up to maturity. Bond exposure calculation, you get three choices here. You can calculate the bond exposure on the total portfolio value. You can calculate it on the bond position only, or on bonds plus cash, near cash, and float. The near cash is the exposure, the cash exposure that you're holding through another instruments. To make it clear, if you have a balanced fund, which is 70% equity and 30% cash, that 30% cash will appear in the near cash. Therefore, that indicates you that you have a 30% cash exposure, but in order to liquidate that cash exposure, you have to sell something else, which is the 70% of the equity, because you cannot just strip the cash out of your fund. You have to sell the old fund. And that fund holds 70% of equity. Duration, you can have it Macaulay or modified. Then this will say it later. Expiry warning workdays. There will be a button that I will show you, where by clicking it, it will show you everything that is expiring within these working days on any asset that has an expiration or a cash flow. So you got bond coupons, you got futures, forwards, and options. All those instruments have either cash flows or expiry date. Options, the vega is calculated 1%, the gamma is at 1% of underlying, and the theta you can select between 1 and 14 days. Okay, so we keep it to 7 now. Equity stop loss alert. When you buy or when you trade an equity, you can input your target and stop loss price. We will show you the price of your target and stop loss, or we will show you the percent from the market price to those two targets, or you can see both, the price and the percent move needed to hit that price. Market price rule. This you can allows you to select either to use live prices only with market open, or to also use prices before the market opens and after the market closes. Now, be careful on this. Um, it can be that it will give you jumps in your daily P&L because before the market opens, a lot of equities do not have a bid and an ask. And we do cross bid and ask for portfolio revaluation. So if you're long an equity, we're going to revalue it using the bid. Now, if the bid goes to zero, we're going to revalue it to zero. Therefore, you're going to have a big loss if it's a long position. Actually, if you're using the bid, it must be a long position. And therefore, and also after, when the market closes, the moment it closes, but there is no official close on the Bloomberg terminal yet, your position could go to zero. Okay, so at that point, if you see funny numbers and you see some positions that are revalued at zero, and you have selected to use live price in pre and post market, just go back to the inputs, click on use live price only with market open, and at that point the position will be correct revalue versus the last close. Okay, now that we have seen all these setups, let's look at the last one, which is the PRTU portfolio update. Now with this spreadsheet, you are able to update your portfolios in Bloomberg as you book trades. Okay, what I mean is this. Okay, let's take this portfolio here, which is totally empty. I copy the portfolio number, Control V, and I paste it, and then I click on Update PRTU. What I get is this pop-up that tells me the requirements in order to update your Bloomberg portfolio. The requirements are that you set the international setting of your PC to use the dot for decimal separator and the comma for thousands. Your Bloomberg portfolio has to have the enable history option selected, and you need to have Terminal Connect for Excel installed. For that, you run apps btc go, or you can call your BRAP and ask support for that. If any of these requirements is not met, the portfolio update will not work correctly. If you do not want to see this pop up every time you click on this checkbox, just click here, do not show again, and this will not show anymore. Okay, let's leave it unchecked. Okay, so now we are ready to start inputting our portfolio. Now here on the position keeping, on the summary, we call it asset allocation, you see all the exchange rate versus euro, because we selected euro as our base currency. Now we have two ways of inputting our portfolio. One is probably quicker, but is not as detailed. The other one is a bit longer, but is very detailed. So, okay, so now let's see how to input a new portfolio using the workbook code. Under the maintenance group, there is this icon, new portfolio input. Okay, here we have the portfolio accounting currency that we inputted just now, and you're given a choice to input quantity in percent or in absolute term. If you input in percent, you need to provide a portfolio value, of course, in order for the workbook to calculate the exact number of shares or nominal amount of bonds and so on and so forth. And given that you have the option to input in percent, the inputs are limited to cash instruments, so equity, bond, mutual funds, ETF, and cash. So there are no derivatives in there. So let's go on to the equity. Let's minimize this, make it a bit smaller. This file here was exported by a portfolio in Bloomberg. Now there was a lot of other data that we don't actually need at this point, so I erased it. So all you have to do, take your equity tickers, do a copy under identifier column, just paste value, and then do the same for the amounts. So the quantity. Okay, the way that this works is that the value is yesterday close value. All right. So when you input a new portfolio, input the position that you had at yesterday close. If you did trade today, then you're going to input it in a second time. Otherwise, the value of your position will not be in line with the actual positions of the historical value. Then you proceed to bonds. We got 3 bonds here. We do the same. We copy the identifier and then we copy paste the quantity. Okay, we have a little issue here that this sticker exported from Bloomberg is a ORT 2.5. Now this half is bothering the calculation. It will not be picked up, so you modify 2.5 and everything is fine. Proceed with mutual funds. We got 2 in here. So we copy paste. You have to input the ISIN code and the quantity. We do the same. Now for mutual funds and ETF, you all well know they're under the same ISIN. You can have different shares. Therefore, for this one, this is unique. While the second one, which is the Eurostoxx 50 short ETF, you have many different Bloomberg ticker. So the workbook and Bloomberg is not able to identify which one you're holding. Now there is a column here which is half red and half black. Normally the black columns header indicate that there are formulas in there, while the red one indicates that there are no formulas, so you can edit them. This one is both. So you do have a formula in here, but you can overwrite it. So let's say that we are holding the short stocks 50 quoted in Milan Stock Exchange. So we overwrite that and we put the Milan Stock Exchange. And at this point, you have a proper value. We go into cash and we input our cash position. So the currency and the amounts. Okay. All right. So we have everything in here. Go to home. We got a total portfolio asset and we click insert portfolio. You get a pop-up, which is fairly practical because if you forgot something, you can check it out here. So we have a total equity value, bond, mutual fund, ETF, cash, and a total portfolio value. Double check on this, otherwise it's going to be quite messy to change it afterwards. If all is fine, just click yes. Once you click yes, go back to the menu, navigate, asset allocation, there it is. All right. And as a matter of fact, if you go under equity, you got your equity position, which is revalued correctly. And your daily P&L, it's already working here because, as I told you, those assets that we just inputted are inputted at yesterday close value. Therefore, you already have the daily P&L in here. Okay, so this is the quick way. And the quick way will leave you under the current account just with your cash position. All right, so you have no records of all the other assets that you inputted. The other way you can do this, it's a bit longer, but it will give you a lot more details into your current account. Okay, so I'm gonna pause this, clean up the sheet, and then I'll show you the other way of inputting your portfolio. Now open a new master spreadsheet, and I've already set the euro as our base currency and all the settings that we inputted in the previous example. Now the other way of inputting a portfolio is let's make this smaller. All right, so this is the portfolio we have to input, and the yesterday close value was this one. Okay, so we go into the spreadsheet and we have to make an opening balance. So we go in current account, and the workbook already sees that there is no position whatsoever in the portfolio, so it's a brand new portfolio. So the transaction type is opening balance and the currency is euro, because we cannot input an opening balance in a currency different than the portfolio currency. Alright, so let's input the opening balance. We confirm, that's okay, and we get a PTT already filled in with the opening balance that we just inputted. So by submitting that, which actually I've already done previously, you go in PRTU, sorry, let's put it in order. Okay, and you got your opening balance there, so you have a position of 11 million euro. Okay, now we start inputting our portfolio. So the first equity we have is harmonic drive. So we go on equity, buy. You have a choice if you input a position in percent or in absolute term. We have in absolute terms, so we say no. The workbook knows that there are no equities in the portfolio. Therefore, the enter new equity checkbox is already selected. So this is 6324, 6324, and the stock exchange is Japan. So we either scroll down or we press J key and we get Japan. We click get data, and there we have the name, the price. This is the actually current price, okay, but we're not going to input that. The current FX, we have no commission because we're going to see that later. Settle days is 4 days. All right, so the price that we want to input is yesterday close, 2896. So it's 2896, and we want to buy 12,000 of those. Confirm. You have a pop-up that tells you what is going to be inputted into the spreadsheet, and you have a choice to print a trade ticket. Let's say yes. First of all, this is the print ticket. This is the ticket that is going to be printed. Okay, so you have the total amount of the trade and all details of the trade, and you got the ticket number, which is ticket number 2, because there is already one deal, which was the opening balance. So if you click print, it's going to be printed. And we have 2 PTT. One is for the shares, so 12,000 share of harmonic drive. We submit that. And the other one is for cash. So we're selling, so we're going to go short 34 million and change yen. Submit, and you go into your PRTU and opening this portfolio. You got your position in Harmonic Drive, you got your opening euro position, and you got your JPY. Okay, so it is updated. If you go on to equity, this is your position here, and everything is in line. All right, the same way you go on and you input all your position one by one. I mean, I'm not gonna take you through that because it's gonna take some time, but the main difference with this method and the, let's say, automatic method of new portfolio input is that if you go into the current account, you have your initial balance here, opening balance, and you have your buy of Harmonic Drive. So after you input all your portfolio, you're going to have a list of trades that represent your portfolio. So this is why I was saying that by using this method, you have a more detailed information of what you have done. So those initial position that you imported are actually recorded as buy or sell. Moreover, you got a cash flow here. Okay, so you know that in over 3 days, because this is T0, T1, T2, T3, and over T3. This is T4 just because Tokyo market is closed now, so normally it's T3, but it's already closed, so it becomes T4. You have your cash flow projections. All right. Now I'm gonna input all the other trades, and then we're gonna take it from there. All right. Okay, so now I have inserted all the equity, bonds, and mutual funds and ETF positions. As a matter of fact, in the asset allocation spreadsheet, we see some numbers now. The currency exposure that we see here at the moment, just US dollar. This is the P&L of the dollar positions that we have, because we bought some US dollar assets, and as a matter of fact we are short dollar by a little over 200,000, and the exposure, the net exposure, is only $870 that's given by the P&L. Down here we got the exposure for asset class. Now this exposure by asset class doesn't add to 100% because we have a short ETF. As a matter of fact, the equity exposure through mutual funds and ETF is short 10,730, while the total is 367,000. So if we liquidate the position, we're gonna cash in this amount, but the exposure is net short by 292%. Okay, now to input the cash, let's make this a bit smaller, and we bring our original portfolio. These are cash exposures. Now to input those, we have to input adjustments, in the sense the cash that we are holding now in our current account is coming from the trades that we have recorded. These balances, we do not know if they come from FX spot position or previous buy and sell that we did. Therefore, we have to adjust our exposure. Under the cash icon, you select the current account, you select the amount in absolute term, and that applies only for all transaction types which are not adjustment. Okay, so if you put a deposit, you put a positive number. If you put an expense, you put a positive number, and then the code will take care of changing the sign. The adjustment is free, therefore you have to input plus or minus. Actually, you can omit the plus, but you have to input the minus if it's a negative amount. So let's start with the Aussie dollar is 1466620. You select the currency, settlement day we put 0. Now another reason why we put adjustment is that if we will put deposit or withdrawal, first of all it will impact our money weighted performance, and second of all it will appear here under deposit and withdrawal, so it will actually change the invested capital. By doing adjustment, this is not going to have any effect on it. We confirm, okay, and we get our usual ticket for adjusting the PRTU portfolio. Now do notice that the cost price is always 1, because we are gonna change or add the position in Aussie dollar, and the cost is 1, so we're not doing any kind of FX exchange like Bloomberg does down here. Okay, so you submit that. All right, now for I'm gonna input all these trades. I'm not gonna record all of them because it's not gonna take too long. So for Swissy, for example, we have to do just one calculation because we are now short 270,000 and change, but our position in the portfolio is 179, so we have to do an adjustment for 450, 130 to go from minus 270 to plus 179. Okay, so I'm gonna pause now. I input all those adjustments and then we'll resume from there. Okay, now we have inputted all our position including the cash. We started with 11,416,000 euro. Currently the value is 11,420,000 and change, and today we are making, actually we're losing roughly 1,000 euro. Now through the menu up here we could start tidying up a little bit our currency exposure. We have a lot of shorts here, so you go into FX spot, and you get the option to cover amount in current account or open a speculative position. Now we want to cover this, so we select the cover amount, we confirm, and we get this table where we have our cash exposure at T0, T1, T2 and T3. Of course we cannot select euro because this is our portfolio currency, but we can, for example, close this short position in US dollar. So we confirm that, and we get an FX spot ticket already filled in. This price is market price at this very moment. Settlement date is 0 days because it's a T0, and we confirm that. Again, if you want, you can print a ticket, and you get your usual. Sorry about that, it came out a Brembo, but just because I have a developer terminal and For whatever reason, Bloomberg removed the currency loading, so I got an old screen. Sorry about that. For sure, if you have a full terminal, everything will be okay. So we got our USD dollars. We submit that, and we have our equivalent euro. Okay. Now on the asset allocation, now we're long US dollar, and this comes from the positions that we have in US dollars, which are mainly in actually they're exclusively in equities. We got IBM and 3M. All right, so this is the way you are gonna get rid of your currency exposure. You can do for all these currencies, and so you will only hold euro in your portfolio. For buying, selling, it's very simple. Again, dealing in percent. Let's try dealing in percent. Say yes. At this point, you can either enter a new equity and you put your ticker here. Stock exchange, yuan comes United States, get data, and you can take it to an exposure 2.5%, let's say. This price is good for us. Confirm. So you bought 5091 Harley Davidson. Let's not print a ticket. Okay, again, this is the US dollar currency amount, and this is the and these are the Harley Davidson shares. They are saved in our portfolio. We go into our equity position, here our Harley Davidson, and we go into current account, and this is the Harley Davidson 5091, and this is the amount in currency that we pay for them. If you want to do increase something that you already own, again in percent term, you just select it. Let's say I don't like this one. Let's say Brembo. It tells you that the current percent is 0.79, and we want to take that to 3%. Confirm. We don't want to print the ticket. Let's get rid of this. I mean, this is always the same stuff. You go onto equity, and your Brembo are now at 3%, and this is what you have in your current account, how many you bought and how much, and the cash flow that actually was impacted on your portfolio. The same goes for the actions, dividend or split, reverse split. If you put a dividend, you just have to select the ticker and input the dividend. Action, split, reverse split, same thing. Just select the asset, the equity, and then for each one you get 2. This will double the amount of shares that you own and will divide by 2 your historical price. Okay, a few more, couple of things. Equity options. You can book a naked options or a covered options. Difference is that covered option, you can buy puts or sell calls, and there is a limit on the amount of options that you can buy and sell. You select the underlying. If you do not remember the option ticker, you click here and you get the option page. Let's say is this, so we copy that, we input it into the option code text box, remove equity because we don't need that, get data, and this is all the data of the option. You have 150 shares in position. Each contract is 100 shares, so you will not be able to buy more than one contract because you cannot go net short because you said you want to do a covered option, so you can only buy one put. Okay, confirm, and you have your IBM put. As a matter of fact, if you go under equity and index option, here's your put option on IBM, and on your asset allocation you have your exposure to the delta of equity and index option. Roughly all these menus work the same way. Okay, on FX, on the forward, you can hedge a current FX exposure. Fixed currency, let's say CFH is good. The spreadsheets shows you the Swissy exposure that you have now, which is 451.31, and you can say, okay, let's hedge 70% of that. So this amount is going to be multiplied by 0.7, and this is the FX that you're going to book. You can input the base FX and the forward points, or you can input into the base FX the already finished FX forward. Now I have no idea where the FX forward is, but let's put it at 39. You put an expiry, and let's say 02/07/2017, and you input 0 points. Okay, until you don't fill everything up, the confirm button doesn't come live. You confirm that. Let's not print a ticket, and you have your FX forward. Now it's going to take a little bit time, okay, until it gets the data from Bloomberg. And if you go on FX forward, here is your FX forward and your P&L. You're losing €5 on that one. On the asset allocation, you can see that your Swiss franc exposure has decreased to 135,000 because of the FX forward, and you have also the P&L down here. It's making €58 at the moment. Equity index option, again, naked option, covered option. You have no we have no futures, index futures at the moment, so the covered option is not selectable. It has to be a naked option, and it works exactly as the equity options. Option exercise, you're gonna have, now you only have one, so now you're gonna have the list of all your options that you are holding into the portfolio, and you can decide if it's an equity option to asset settle or cash settle. If it's an equity index option, you're not going to have that choice. It's only going to be cash settle. If you asset settle, then this one you're actually going to sell 100 IBM at 175. We have a calculator of equity hedging wave option, and before you get into the screen, the ticket, you have the choice of picking up all the balanced or flexible fund exposure at nominal value or net exposure. What this means is that if you have a fund which is 70 equity and 30 cash, if you select nominal value, it's going to take the full value of the fund. If you select net exposure, it's just going to take 70% of that value, okay, because the fund is 70% equity and 30 cash. For this functionality, we can calculate how many equity index options we need in order to cover our equity exposure. So we selected the net exposure for the funds. Actually, doesn't make much difference given that we do not hold any balance or flexible funds at the moment. Anyway, we confirm that, and here we go. We get all the equity exposure. Now the workbook already assigns if to hedge with stocks 50 or S&P for those equities that are part of either the European geographic area or US geographic area. All the others are already clicked as done hedge. So if you want to add them up, you just click on either stocks 50 or S&P 500. This one we put it as S&P, okay, and then you got the stocks 50 current price, S&P current price, euro dollar, and you got put and call. If put is selected, you're gonna buy puts, and if call is selected, you're gonna sell stock call, sorry. So we put the strike, let's make 3,000 and 2,000 for the S&P. The month, you can either scroll down with the arrow, or you can open the drop down and select hedge ratio 100%, and you can solve for delta hedge at the money spot, delta hedge adjusted at the money strike, or nominal at the money spot at the money strike. Let's select nominal at the money spot. We click calc, and there it is. We have the answer to our hedging. So we need to buy 15 euro stocks put at 3,000 and 4 S&P 500 at 2,000. Now on this side we have the detail, the position to hedge, and the option details, stocks 50, market price and Greeks, and the same for the S&P. On this side we have the output, and we got the initial delta, the net exposure that we currently holding, and therefore the variation exposure. So if we book these options, we are gonna decrease our exposure on the stocks 50 by 29% and on the S&P 500 by roughly 36%. If you want to book any of these two options because you think that the strategy is relevant for you, just click and you will get a prepared ticket from which you can just book the option. Okay, now we also have a bond hedging calculator with future. Now the only bonds we are holding are in euros,
So we select euro here. We have no future. If we had futures, we could add the future position. As you can see, it's split by currencies. And here you have the summary of our exposure below 1 year, between 1 and 3 years. So this is the gap exposure. The bond portfolio details, so duration, the average yield, and the risk. And this model is based on risk, not on duration. So the calculation will try to bring the risk as close to zero as possible. So the exact number of contract you should sell of the Italian 10-year BTP 1st of March 2017, which you select here, is 4.35. And then of course you cannot sell 0.35 a contract, so you can sell 4 contracts, and this will be the outcome. So your risk will drop from 554 euro per basis point to 37. You can select any other future, and once that we get the data from Bloomberg, there it is. If you use the Bundes 10 years, you have to sell 3 contracts, and your net risk goes down to 15 euro per basis point. We have seen the bond hedging calculation. Now let's see the intraday realized profit and loss. Okay, let's take this position in Brembo, which is a market price of 60, and we're going to sell 1,000 of those, and we do it at 61, so we would expect 1,000 euro realized profit on that. Okay, we're gonna skip this. We know already how it works. We go on asset allocation, and we have realized of 1150, and that is, yeah, because the last price was 60, but actually the previous close was not 60. Let's see the previous close. We put it into Bloomberg, and actually the previous close was lower than that. Okay, so if you do FLDS, so we do HP, that's better. HP was 59.85, so that's 1150 is correct. Okay, so once you start closing interest, the spreadsheet keeps track of your realized profit, so you do not have jumps in performance. The same applies for all asset classes, and bonds, ETF, futures, whatever. Now for futures, we do have initial margins. Now the initial margins, of course, they do change over time. Okay, so if you do not want to have an initial margin put into your margin account, just put 0 everywhere, and you're not going to have an initial margin. What happens is when you open interest on a future, the workbook takes the initial margin times the number of contracts and puts it into the margin account. Let's try one futures on equity. There are no futures, so enter a new contract is already taken in, and you cannot change that. Let's take the CAC 40, and we take the March contract 2017, and we do 10 of those. Price, we make this. I don't know how far that is. Open interest, buy or sell. Let's say that we buy it. We have no commission, with no fixed expense. Confirm. Okay. Again, we get all our Bloomberg update. Now, if we go into the margin account, we see that we have 26,000 euro, which were taken from our current account and put into the margin account. Now, the moment we are going to close that contract, the initial margin will going to be taken back to the current account. Now, do keep in mind that there are some futures that do not have an absolute amount for initial margin, but are percentage based, like the FTSE MIB. So the moment you open interest, 11% of that value is going to be put in the margin account, and then when you close interest on that position, 11% is going to be put back on your current account. Now, if the value of the contract has changed sensibly, you're going to be either long or short into your margin account, so there's going to be some leftover because we work on percentage. But not to worry, if you want to clear your margin account, which you see here, 26,000, you go on cash, margin account, and that tells you if you want to move some cash to the current account or to the margin account. Okay, so if you move it to the current account, 26,000, currency was euro, confirm. Okay, the margin account is down to zero and the cash was put back into the current account. Okay, equity commissions, now they're all to zero now. You can put the commission that you pay to your broker for each single market, and it can be per share if you click here, otherwise it's going to be in percent. And also taxes. The exchanges that do have taxes on buy and sell that we are aware of are already put in, and you can add any of those if you know that there are taxes and they're not included in this preset format. All right, so for United States, for example, we're gonna put 2 basis points per share. So when we deal on a US based equity, so let's say that we buy S.R.L, okay, and we buy 1,000 of those. You see the commission is 2. We got no taxes, we got no fixed expense. We confirm, and going into the current account, you see commission per unit, so the total commission is 20, and this is added to the amount in currency that you paid, so it should be 39,060 based on the price you dealt, but it's 39,080 because you get $20 in commissions. Okay, so a few more things. Under commission, margin and cost, we've seen the equity and initial margin of future. We got some fixed cost. Fixed cost, you have fixed transaction processing cost. This is normally what your back office charges you per ticket. If they do not charge you anything, or if you're not aware of it, just leave it to zero. If not, just input the value. This is in unit of currency. Okay, so this will be €2 per ticket, and on the current account it's going to appear in this column here. Bond futures per contract, equity index future per contract, traded option per contract, bond percent commission. Well, normally the brokers give you a final price including commissions, so most of the time you're either not aware of that, or maybe you are aware of the price they're going to give you, that you're going to record into the spreadsheet includes commission. In case it doesn't, you can input it, and the same applies for mutual funds. Okay, all right. So now few views that we haven't seen. Okay, we've seen this, we've seen the portfolio views and the input views. We have bond and bond futures. Here you have your bond exposure in terms of average duration, convexity, average yield, spread over euro benchmark curve, basis point value. If you got floaters, average life is spread for life. If you have bond futures, you're going to have the average duration, the convexity, and then the total of the portfolio. Down here you got your coupon flows coming up. We have none in the next 3 days, and the first one is on the 25th of May and is an ORT expiring 2019. Coupon is 1%. You have 250,000, so you're going to receive 2,500. Bond futures, if you do have bond futures, there's going to be the gap exposure. P&L for equity futures, it's going to appear here. We only have one. It's making €2,500 and is the CAC 40, and the same is for the bond futures. Okay, so equity country allocation. Here you have a breakdown of your equity exposure by country and macro region. So the Europe, Americas, Far East, and global. Normally global is only for funds and ETF. You got the value in euro in portfolio currency for single stock on this column, value in portfolio currency for long funds. We have one in Asia emerging, and value in euro for short funds, and we have one in Europe, which is the Stocks 50 ETF short. Option delta, option gamma, vega, and theta, and we do have one here. If you remember, we bought a put on IBM, one contract. Futures, weight on the portfolio for every single country, weight plus one gamma if you have option, of course, and weight on the stock component. So this is the global portfolio. So France, you have an exposure of 4.3 roughly on the portfolio, and is 25% of your equity exposure. Then we have the equity risk report. Over here you can set your liquidation timing. So you select an average volume, let's say 10 days. You select what is the percent of the market that you are able to trade, 3%, 2%, whatever that is. And based on that, down here you have the liquidation value. So after 1 day you're gonna be able to liquidate all the portfolio except Harmonic Drive, Fila, and Siegfried. On the second day, Harmonic Drive will go to zero, but you're still gonna have some to equity exposure because they are either large position or very liquid, and we're going to have this also in a graphical view. Here you have your sector exposure. Okay, we have at the moment we don't have too many stocks, so we have one per sector. You got your total equity portfolio beta versus these indexes, and the equity beta versus this index. So this is the total equity, means also with ETF and mutual funds. This is just stocks. This is the fund, and then you got the current PE, estimated PE, current year, next year, and the amount of negative PE in the portfolio. EPS peg and peg next year. Again, this is the number and number of negatives. You have 6 stock that do not have a peg this year or next year. Average share price in euro. Here you got your equity futures beta and your equity option beta. You can select the period for beta, so 1 year, 2 years, or 3 years, and it can be daily, weekly, monthly, or yearly. This is the number of contract that you have to buy or sell to bring your beta to zero. This zero can be changed. So to bring to zero your total equity exposure, your beta, you have to sell 11 Dow Jones Industrial, 4 S&P, 21 S&P Mini, so on and so forth. Okay, next one, we got the top bottom contributors. Well, today the market is actually closed. This is Sunday as I'm recording. This we have Brembo 4 times, so I'm gonna check on that. Sorry about that. This is your asset class daily performance contribution in a graphical view. Bond performance contribution, we only have 3 and they are losing some money. And I'm sorry, equity performance contribution, there is nothing because the market is closed, but we do have the CAC position is making 0 because it's not moving. Graph, okay, we have the currency exposure. Sorry, let me go up. The asset class breakdown, so you have 76% in cash and then 12.5, 12.6 in equity. Net equity exposure by country. Currency exposure, so we have 69 in euro and then we got Canadian and other currencies. Bond exposure in euro. This is the gap exposure. Let me move that so we can see it better. And this is the time to liquidate that you have seen before. So with those two liquid or large position you have on day 5, you're still gonna have 9.82% of your equity portfolio. This is equity portfolios, not total portfolio, of course. Okay, and I think this actually wraps everything up. So last 2 things. Check for expiration, click here, and the code will run through every asset that you own that has an expiration or a cash flow as you set up in the user spec. So it's gonna check if there are bond coupon the next 7 working days, future in the next 5 days, FX forward next 7 days, so on and so forth. Sorry, bond options are not there, so I'm gonna remove that. And this is to update the portfolio close. So throughout the day, if you want to update the portfolio close, so you're going home, you don't want to close the spreadsheet and you want to update the portfolio close, it's going to save the current value into the NAV, which is down here. Okay, every time you close the portfolio, it's going to ask you if you want to save your portfolio data now. You can say no. If you say no and then you reopen it, the next time you close it's going to ask you again. If you say yes, it's not going to ask you until tomorrow. So be careful, because if you do it early in the morning, that is going to be your value for that day. Now if you say yes by mistake, you can always go into NAV and just erase the last date. Okay, you can just go on it and just delete it. Nothing is gonna happen, and then you're gonna be asked again. Okay, so I hope you enjoyed it. And again, anybody that would like to have a free copy of the spreadsheet, it's just enough to write a mail to our info mailbox. Thank you very much for watching, and have a good one, and I hope to hear from you soon.